Aranjin recently entered into a JV agreement with a sister company, and that has meant some really great things for you, now being the CEO of both companies, but also for the pure asset profile. Could you tell us more about why it benefits Aranjin to enter into this agreement, and when can the market expect results from the Bahi Ul copper and nickel discovery?
Absolutely. Aranjin Resources, as mentioned, I am the chief executive of Aranjin Resources as well. Aranjin entered into a joint venture reciprocal mining rights agreement with Ion Energy, the goal of which was to expand Aranjin's reach by adding an additional 110,000 hectares of highly prospective land to explore. Mongolia is a nation of 3.5 million people, 1.5 million square kilometers, of which only 3% has been explored. Yet we know that Oyu Tolgoi, the Rio Tinto project in Mongolia, is the third largest copper gold deposit in the world. Adding 110,000 hectares for Aranjin will enable the company to have a larger piece of land or larger hectarage to look for copper in that country. Aranjin today currently controls the Sharga license as well as the Bayun Under license, both of which are extremely promising and will have detailed exploration done on them over the course of this summer and into the fall. But the Baba Ul project, as you've mentioned, shows extremely exciting copper-nickel anomalies that we will be putting out to market when we have additional details.
There are so many headlines about copper being the new gold. How do you feel about Aranjin's value proposition in Mongolia?
With Oyu Tolgoi, the third largest copper gold deposit in the world, being in Mongolia, Mongolia again being a very resource-rich country, China being at the very doorstep of Mongolia, and China being once again the largest consumer of copper on the planet, copper and lithium are both required for the electrification of our planet. What better way for Aranjin to play a part in that than build a JV with Ion Energy, a lithium company, but also have very exciting prospective assets in Mongolia that could help service the Asian demand for these battery metals.
Is Aranjin working towards Asian strategic partnerships?
Aranjin continues to work with Asian strategics to build better relationships. Aranjin also looks further west to the Americas and specifically LATAM, where you have a number of copper explorers and developers to build a partnership with as well.
What should investors be looking out for in the coming months from Aranjin's exploration programs?
Aranjin intends to drill 12,000 meters at the Sharga asset. That includes a number of holes across the entire basin where we've identified 5 specific targets. We'll also do one deep hole at Bayun Under, which is a mining license with a 30-year term that's had 57,000 meters drilled on it. That deep hole will intersect all of the existing drilling to allow us to come to a resource indication in due course. And beyond that, we'll be doing some HQ diamond core drilling at Baba Ul, the Ion Energy license, where we've seen significant copper-nickel anomalies in a Gabbro-style deposit.
You're the CEO of 2 battery metal companies. Are you living the dream as a forward-thinking leader that predicted this clean metals boom all the way back to 2017?
I am living the dream. I mean, my wife would beg to differ, given, it is a cumbersome task being the CEO of both companies, but the overlap between our boards as well as our technical team has further allowed us to streamline operations, reduce overheads, and ultimately build 2 world-class companies that could play a pivotal role in the clean green energy revolution.
I understand Ion has the highest grade sample of lithium brine ever collected in Mongolia. Can you tell us more about that and what that means for Ion's plans?
Absolutely. Over the course of a site visit in April that included our technical team, we collected brine samples on surface of up to 918 milligrams per liter. That is significant because 918 milligrams per liter, though concentrated, represents a significant find with respect to lithium in that basin.
What is the Ion team seeing in the current market environment with the volatility and even some investors scrambling?
Ion, thankfully, is insulated from a lot of the market issues that we're seeing today as a result of being a fully funded company. We're not looking for equity at these levels, nor are we looking for cash in the treasury. We continue to be well insulated, but we are aware that the market currently, the sentiment is rather negative and pessimistic.
Considering the long-term game, does any of this change Ion's aggressive growth plans for the next 12 months?
It does not. We continue to have the funding necessary to explore our assets and ultimately bring in a strategic at the right level when we have a better understanding of our assets.
And what are you hearing from all the investors that you are speaking to?
A number are worried, but a number are in very much the same boat as everybody else. There's a fair bit of uncertainty. Inflation is at record levels. We've seen that there may be talks of central banks rolling back their interest rates as well to help deter this inflation. But we're in it for the long game. We're not a short-term player. We've always said since initiation and since I founded the company that we're in this to produce an ultimate win and exit for all our shareholders. It is not a short-term win, if you will.
Headlines are still shouting, battery metals supply can't meet demand. Yet jurisdictions are still committing to regionalized supply chains. What do you think about this?
I think it's important that we continue to look for lithium in local jurisdictions. China consumes 53% of the world's lithium today. They import the vast majority of that from Australia and LATAM. When we look at the global carbon footprint associated with this clean green energy revolution, one must consider the carbon footprint associated with shipping lithium from Australia or from LATAM to the Chinese market. You need to look for local supply, irrespective of jurisdiction, and our proximity to that largest consumer, that being China, will obviously help upend the lithium supply chain, but more importantly, reduce the global footprint for lithium and car batteries going forward.
What do you think about OEMs that have made commitments about building our local value chains, yet have made 2030 timing commitments?
I think it's important that they do look for supply. It's very much, if you were to look at drawing similarities, the internal combustion engine, for instance, if Ford were going to go into the oil business, that's what you would expect to see. So as far as OEMs looking to get their hands on the necessary elements for their supply chains, I think it makes sense given the global pandemic that we've just seen showed a number of supply chain crises across various industries, so it was agnostic. So if OEM manufacturers in the battery metal space were to go out and source their own raw materials, that would alleviate some of those issues, one would hope, but ultimately would allow them to have better control on the pricing of these commodities.
How is ION's value proposition going to help with these worldwide 2030 commitments?
I think ION's value proposition is almost threefold, if you will. The first is the fact that we are offering employment in country for a mineral that is deemed very important for this clean green energy revolution. Two, as mentioned before, the proximity to the largest consumer on the planet. And three, we're also giving Mongolia the opportunity to become a manufacturing hub for these batteries, thereby educating the local workforce and putting Mongolia on the map as far as their technical expertise is concerned.
ION has the strategic advantage of highly prospective lithium brine sites mere kilometers away from the Chinese border. What does that mean for ION's long-term value proposition?
For ION, that means that we can continue to play a key role in supplying these necessary elements to the largest consumers on the planet. It allows us to help drive the electrification of the world and ensure that the carbon footprint associated with those electrical or with those elements is vastly reduced.
ION has been on a quickly moving growth trajectory, including being already in talks with potential strategics. So given everything that we've talked about, is ION fully focused on the Asian supply hub, or are you open to strategic partnerships in Europe or North America?
Mongolia is a nation that's always had strong relationships with a number of countries in Asia. Mongolia also has what's called the third neighbor policy. So the government will actually encourage you to do business with countries other than Russia and China. Korea has significant relationships with Mongolia, as does Japan. Each of those nations has helped infrastructure projects in that country. Germany has a very long-standing relationship with Mongolia. The US, during the last administration, spent a considerable amount of time building a trade relationship with Mongolia. And we've seen time and time again that various nations, including LATAM nations, are now visiting Mongolia for their resource requirements. Despite our geographical location and the strong ties between these various nations and Mongolia, we would absolutely welcome the opportunity to work with European strategics. We are, in fact, currently speaking with a European strategic as well as a LATAM strategic. While our proximity to the largest market may make the most economic sense, we do have options and we will continue to explore them.
this is Carlos Bertoni. I'm the interim CEO for Reunion Gold Corporation. Reunion Gold is a Canadian company. We specialize in doing mineral exploration, particularly gold exploration, what we call the Guyana Shield, countries of Guyana, Suriname, and French Guiana. So today, I'd like to talk to you about the 5 reasons why you should be a Reunion Gold stockholder, why you should buy Reunion Gold. Firstly, we have a brand new discovery we call Oko West in Guyana. We announced this discovery in 2021. This is a gold discovery. We have gold mineralization disseminated in these rocks over 2.5 kilometers long and down to a depth of 575 meters from the surface. After only 13 months of drilling, we have advanced this project very significantly and very fast. And this project we call Oko West shows very good potential for a discovery this size and scale along a 6-kilometer long sheared altered contact between granitoids, granitic rocks to the east, and sedimentary rocks, volcanic rocks to the west. This contact is 6 kilometers long. We only really explored the northern 2.5 kilometers. So gold mineralization is focused along the 6 kilometers contact, and we still have a lot of exploration to do. We have some other potential to find additional mineralization to the west of this area and to the west of this 6-kilometer contact, and we'll do that gradually as we move forward. Second point why you should be our stockholder is that this deposit has a potential for being something of a very significant size. It looks like it will be open pitable. Most of the mineralization starts right from the surface, goes down, as I said, to 575 meters. And we have about the width, about between 70 and 100 meters coming right to the surface. Right on the surface, we have weathered rocks, which are easily mineable and extractable, what we call saprolite. And we have a good grade potential. Looking down to 575 meters, we have an average gold grade of 1.75 to 2 grams. That's a good grade for an open pitable mine. And this mineralized package of rocks with weathered material and unweathered material is sitting right on the surface, as I said, and it will be ready to be mined from the surface. Unlike several other cases where people have to deal with artisanal workings on the surface and then go underground. The third reason you should consider being our stockholder is that we have $52 million Canadian in the bank. And that is at the end of July recently. And this funding allows us to accelerate the exploration that we're planning to do. We're adding 2 additional diamond drill rigs in October. That will bring the total number of rigs we have to 6, which will give us a capacity to drill about 7,500 meters of rock per month. That's a very, very important feature to accelerate this project. And that will continue to next year. We will drill continuously this deposit. The fourth reason why I should consider being a stockholder is that we're operating in Guyana, which is a mine and a resource-friendly jurisdiction. There are several mines that have already operated and are still in operation in Guyana. All their agreements with the government of Guyana have been respected, and it should not be any different from this case. So mining, particularly gold mining, contributes about 16% to Guyana's GDP, and 50% of its export. Very important feature in Guyana that gold mining is a key contributor to the revenues of the state, and we have a jurisdiction that understands mining and what it does for the country. There has been a very significant discovery of oil offshore from Guyana, and this discovery can potentially transform the economy of the country, bringing additional infrastructure, etc. So it's a country with great potential to grow, great potential to develop its infrastructure, and then help the gold industry as it goes along. And finally, the fifth reason why I should consider to be a stockholder is that we are a team that has operated and done exploration and developed mines in Guyana since the 90s. We know what we do. We're comfortable with the place, and we know what it takes to bring projects from the early stage exploration to production. And this team is ready to continue. The company is called Reunion because this is a team that worked in the 90s and now got together. We reunited to bring a new development to the country and to the Guyana Shield. So these are the 5 reasons to be a shareholder. We encourage you to study our company, study our projects, consult our website and our press releases, and thank you for your attention.
Hello, I'm Warren Baranowski, Chief Financial Officer for Treasury Metals, wanting to take you through the 5 reasons why you should be owning Treasury Metals. The first is we own 100% of the Goliath Gold Complex. We're located in northwestern Ontario with easy access to world-class infrastructure. We're right off the Trans-Canada Highway. We've got a rail line that runs across our property boundary, and we have a federal EA in hand. So from a permitting perspective, we've already got the federal permits, and we're working on the provincial permits to move the project forward. We have a development and construction focused management team. Over the last 12 to 18 months, we've brought in a bunch of professionals that have significant experience in taking projects from this stage all the way through to construction. Our president and CEO, 35, 40 years of experience across 4 continents, most significant being the construction of the Victor mine in northwestern Ontario. Brought that in ahead of schedule and under budget. I was involved in the financing and construction and operations of the Renard mine in Quebec that came in ahead of schedule and under budget. Our permitting, our HR, and our director of projects all have significant experience in taking projects from the stage we're at currently all the way through to operations. So we've really put a big focus on putting a management team in place that can take this project from where we are all the way to production. We've got a strong financial position. We closed a financing in the second quarter of this year with Sprott Resource Streaming and Royalty for a $20 million US royalty financing, and that will fund us all the way through pre-feasibility, feasibility, and all the way to our project financing decision. The PA which we released in 2021 really underpins the valuation, shows very good economics at a $1,600 gold price, a $328 million NPV, and a 30% IRR. And then when you leverage it to higher gold prices at an 1850 gold price, it's about a 500 million NPV and a 40% IRR. So this project, we hope to continue to grow this as we take it from PA all the way through to operations. And earlier this year, we put out a new resource estimate that showed about a 10% increase in our measured and indicated resources and about a 45 to 50% increase in our inferred resources to just under 3 million ounces combined between the 3 different categories. And this, we feel we've got a significant amount of exploration potential on our property. These deposits that represent those resources only represent about 3 kilometers of about a 65 kilometer strike length. So what we've done in the fourth quarter of last year and all the way through this year is we put a renewed focus on finding additional deposits along that strike to really unlock the potential of this deposit. And I think finally, from a valuation perspective, I think we are significantly undervalued relative to our peers. We're trading at less than 0.2 times NAV versus an average multiple of about 0.4 for North American developers. And I think as we can continue to show the development and progress at Goliath, we should unlock some of the value and move ourselves more towards peer average multiples. And with that, we would expect to see a significant re-rating on the stock price. So to summarize, we've got a project with a federal EA in hand, located in a sought-after jurisdiction in northwestern Ontario with ready access to world-class infrastructure. The PA provides a solid economic base for us to grow from. We've put a renewed focus on exploration across our 330 square kilometer property package, when we've shown several new targets this year, and the updated resource estimate shows an increase in ounces and confidence in our grade models. We've got a management team with significant experience with the capabilities to take us through construction and into operations. And we have the funding in place to take us to a construction decision. So thank you very much and have a wonderful day.
I'm the Chief Executive Officer of Power Nickel. Power Nickel trades on the TSXV and the OTCBB and in Germany as well. The main symbol on Power Nickel is PNPN. So this morning I'm going to give you 5 reasons to invest in Power Nickel, and we'll try and make it punchy and interesting. So number 1 reason, it's probably the best valued nickel exploration play in the planet, which is obviously a bold claim. But if you look at it from the perspective of pounds of nickel discovered in the ground, as proven by 43101, arguably we are the cheapest, the lowest market cap per pound of nickel discovered. So that's a pretty important criteria. So that would be, I would say, one of the lead reasons to consider investing in Power Nickel. The other thing is that it's got massive upside. Power Nickel is developing the NISC project in James Bay, Quebec. And the NISC project is an ultramafic deposit. What does that mean? Well, it looks like a Lynn Lake deposit or a Voisey's Bay style deposit. So Lynn Lake was 22 million tons, and Voisey's Bay was 50 million tons. Sort of a, more north of $1 billion for Lynn Lake and north of $4 billion for Voisey's Bay. So our geologists feel we're going to be somewhere in between there. That would obviously be a monster improvement on our market value. Right now, we're valued at about 10 million. So if you're an investor looking for a big upside potential win that looks like it's got tracks, obviously that would be a consideration. The other thing that I find when investing, it's always important to invest when momentum is going to be happening. Things that are compelling the stock to move forward are happening. So in this case, it's drilling. So we're starting to drill in mid-September, and it's a highly prospective drill program. We released our inaugural 43101 about a month ago, 4 million tons of around 1.25% nickel EQ. And you're working to add to that. There's some obvious, abilities to add probably a couple million tons of infill drilling. And then the deposit is open both on the flanks and the depth on the west and east sides. And those were our highest grades of nickel, over 2%, approaching 3% nickel EQ. So we'll be drilling those. So it's going to be a super exciting drill program. It's going to start mid-September, run through October into November, and we'll be reporting probably starting end of October and through December. So exciting times to be getting in on a very action-packed drill program. And then I think one of the key things when you're looking at your mining investments, one of the things you should look at is where's the jurisdiction. So our jurisdiction is phenomenal. It's in Canada, which is an awesome country for mining. And within Canada, Quebec is arguably the best spot. And then within Quebec, northern Quebec is where you want to be. Reason why you want to be there is that the government has spent a lot of money supporting mining initiatives in that area, has developed good relationships with the First Nations. So the Cree are very supportive to mining here. Our infrastructure is excellent. We're literally located off the highway across from a major Hydro-Quebec substation. And the other thing the government has done is they provided some massive tax incentives. So you can actually raise capital in Quebec with 75% less dilution than elsewhere. And that's obviously, if you're a shareholder, you want less dilution and more access to capital. So we've got that coming. Then finally, the other thing that most people have no clue on is they sort of say, well, if this is such a hot story, how come the stock is so low? Well, the stock is so low because it got beaten back by predatory short sellers. IROC issued an announcement last week to say predatory short selling or naked short selling is illegal in Canada. That was a really important clarification. And we're going to use that clarification to turn the tides on these nasty people that are illegally short selling our stock, and expect some news on that front over the coming months as we deliver the evidence to the investment banks that this has indeed happened and that they need to rectify it or face fines from IROC and lawsuits from us. So in addition to having a compelling business story, it could be a very nice short covering story that would make it a phenomenal investment opportunity. So that's it from Power Nickel. Hope to see you on the shareholder list someday soon, and have a great summer.
Been hard at work this summer, further developing the CoTec story, and we are convinced as ever that we're on a great track and doing some super interesting things which fit well into what the world needs, particularly with the macroeconomic developments in energy, in carbon saving, and obviously the way in which the world is moving around security of supply with the unfortunate war in the Ukraine. So I think the first reason CoTec is compelling is that we've been adding a lot of value, and although the stock hasn't dropped as many other natural resource stories have, we think it now trades at a very significant discount to its true valuation, and that will be highlighted and daylit in the coming weeks as we see our results come out, which are due in the next week or two, and also as we see the progress of some of the investments, which I'll talk about later. I think the second major reason that we're compelling is the quality of the board. We have, in addition to Tom Albanese, who ran Rio, we have Sharon Fay, who recently joined the board, who was the CIO of Alliance Bernstein, and we have just appointed to our advisory committee the gentleman who was in charge of Rio Tinto's venture business and is well respected in Australia. So continuing to attract very high quality individuals who believe the story. The third reason is that there's a tremendous amount of optionality within the portfolio, which is not being valued yet, but we have rights to technologies where when we apply them to assets, that will create a lot of value. And when I talk about MAGA, and that's an example of that, but we have multiple opportunities like that to pursue. And then the last couple of reasons are really around what's happening within the portfolio to our portfolio companies. So Binding Solutions is progressing rapidly. We're very excited about the potential application of their technology to EAF furnaces, which is the future way of making green steel. And that's attracting a lot of attention. They recently went to Japan and met a number of Japanese steelmakers who really want to continue the dialogue. And so we expect the next funding round will be at a multiple of our last valuation, which itself was almost double our original entry price of $70 million. Well, in the case of MagIron, we have both acquired a 15% stake in a business which has a replacement value today of close to $1 billion, and we have almost $1 billion of contained iron ore in the ground in Minnesota, which is super important now that the US is moving towards greater security of supply. There, we made an investment at a low entry price. The recent round valued our stake at more than double what we invested at, but ultimately we think this has a lot of upside, and we are looking for the next round to be a multiple of the $35 million the company's currently valued at. And then lastly, we have committed to, and we've started investing in this very exciting magnet recycling technology, which is a world leader. It's very green, and it allows one to take magnets from existing places like fridges or hi-fis and extract the rare earths from them. And since both magnet supply and rare earth supply is very dependent upon China, again, this is super strategic for the US, and we're starting to speak to the US government about how we could bring this technology to North America, and that could be a big story. In addition, there are some very exciting technologies. We are looking at technologies which can expand the efficacy of potash. So at a time when market's been disrupted by the Ukrainian war, that's particularly valuable. We're also looking at a very interesting technology which can take nuclear waste and deradiate it very quickly, which we're exploring. So, this whole area is fascinating, but it has lots of applicability, and we think the story has a long way to go. So super excited about it, and love to get your support.
Hello, my name is J. Paul Stevenson, and I am the CEO of Sego Resources, Inc., stock symbol SGZ on the TSX Venture Exchange. I would like to introduce you to our Miner Mountain project near Princeton, British Columbia, and discuss our plans for the remainder of 2022. Our Miner Mountain project lies just 15 kilometers north of the Copper Mountain Mine and on what we call the Porphyry Superhighway, a geological belt running from the Copper Mountain Mine in southwestern British Columbia to the well-known Golden Triangle in the extreme northwest of British Columbia. There are 8 currently operating porphyry copper mines on this 1,000-kilometer belt. The Miner Mountain project is located in an area that is totally supportive of mining, and with all necessary infrastructure in place. In fact, it is only a short commute from the town of Princeton to our site. The project itself has 4 high-priority targets for alkalic copper-gold porphyries. Currently, we have been drilling a discrete disseminated gold zone that we believe is related to a distal or adjacent copper-gold porphyry. Our last news release of June 13th, 2022, reported a short intersection of greater than 24 grams per ton gold related with chalcopyrite that averaged 0.92% copper. The gold zone itself averages near 1 gram per ton gold with anomalous copper. We have also intersected 0.1% copper at the northern edge of the gold zone in a previous hole. Generally, we find gold where copper increases, although normally only to around 400 ppm copper. So the two drill holes at the north edge indicate a direction for further drilling. A metallurgical testing of the gold zone gave excellent results. The work concluded 9% of the gold reports to gravity concentration, and 59% recovered in 1 hour and 72% after 3 hours using a cyanide leaching process. An impressive 95.8% of the gold was recovered with little further testing. We are expecting to complete our geochemical testing of 6 further drill holes from our spring-summer program in September, and will release news at that time. We plan to drill again in October to extend the southern gold zone, and while doing so, explore for an adjacent copper-gold porphyry. This will give us news in September-October, with more results later in the year. Our exploration team is led by Dr. Ron Britton, a well-known exploration consultant. I have over 57 years of experience in porphyry exploration. Our director, Al Hilton, was responsible for the discovery and development of the Samatosan mine, and our director and CFO, Dr. Selena Tribe, also has a PhD in geology. Director Sven Golan spent 16 years as an investment private banker in Germany and Austria, and was active in the education and training of securities advisors and investment bankers. He is now with Frucht Express Graber GmbH and Company, which is Sego's largest shareholder. Sego Resources is actively involved with the local First Nations, ranchers, and the town of Princeton. We are proud of our reclamation program, which works in tandem with the exploration program, and we have received a provincial award for our reclamation work. For those of you that have not seen what is involved in a diamond drill program, we have a short video of the complete progress on the landing page of our website. This will take you from drill pad construction to shipping the samples to the lab. I hope you find it of interest. The short video was made during our drill program in late November of 2021. We also have a short resume of our directors and a great deal of technical data available on the site. Sego Resources has news coming and more exploration planned on an exciting project in southern British Columbia. I hope that you will come to our website and learn more about us and choose to join us on our exploration journey of discovery. Our website can be found at segoresources.com. Thank you for your time today, and I'm always happy to talk to shareholders or future shareholders, and can be reached at 604-682-2933 or toll free at 866-683-2933. Please never hesitate to call. You will reach me even if I'm up at the drill. Please remember Sego Resources on the TSX Venture Exchange, SGZ, and our website, segoresources.com. Thank you for sharing time with me today.
Ceylon Graphite is a TSX venture listed company. We've been around for a number of years. I took over as CEO just last June. June 2021, and so my task is to turn this mining company and basically battery processing company into a going concern. We're also listed on the OTC. We have operations in Sri Lanka, and we have some technical facilities in the UK. And our main focus is mining natural vein graphite in order to process it into battery anode material for the lithium-ion battery industry. Our development plan is to develop mines in Sri Lanka. We now have two mining permits, K1 and M1 mining permits, which I think for a junior is pretty unprecedented. So we are going to begin hoisting graphite from these imminently. And then we'll continue on to develop mine 3, 4, 5, 6, all the way through up to basically as many as the market can handle. We have 128 grids in the old mining sectors of Sri Lanka, and we're looking to develop as many as we can to show the OEMs that we're talking to that we can produce tens, maybe hundreds of thousands of tons of this material for the anodes for the lithium-ion batteries and electric vehicles that they're all looking to make. The interesting thing about the natural graphite sector is you have, for batteries, you've got synthetic graphite and natural graphite. So we're mining vein graphite. The other type is flake. We're finding that vein graphite has a higher degree of crystallinity than flake does. And that's a little technical, but what that means, it just makes a better battery. It has better electrochemical properties, and it's just the nature of the graphite itself. So nothing we've done to it. We are making good batteries with it, and we're seeing that our baseline natural graphite anode has a higher theoretical limit capacity than flake does. We need lots of both, so it's all good from that perspective, but we're just finding this unique attribute to our vein graphite from Sri Lanka. It's actually quite exciting. We're finding that the demand for anode graphite beyond 2030 is going to exceed 4 million tons per annum. And right now we're seeing that, the probably market total right now is maybe 500,000 tons. So the world has to catch up. 100% of the processed graphite for batteries comes from China. So we all know, what the problems are there. I don't think I need to go into that. So we're seeing a tsunami of demand coming our way. And we need lots and lots of companies doing what we're doing. And we're, I think, well ahead of the game here as far as talking to OEMs and developing our graphite, showing the market that our graphite is very, very good as the anode in a lithium-ion battery. Yes, the interesting thing these days, obviously, ESG, environmental social governance, is a big factor in what any supplier is looking upstream to their suppliers. And the interesting thing about vein graphite is that it's 95 carbon in the ground, graphitic carbon in the ground. Typically, a flake graphite mine can be anywhere from 3% to maybe 20%, which means you have to have primary processing to concentrate it to 95 carbon before you process it for batteries. So in our case, we're already 95 carbon. So we do not have that primary processing, which is typically a crushing, grinding, flotation, tailings, waste rock, reagents in your effluents, that kind of stuff. So we just skip a step, and that puts us, I think, a leg up on what we're doing as far as mining. We're all small scale underground mining, so we don't have the big footprints and land use that a typical flake graphite mine would have. I think we're going to continue to do what we're doing. We're going to continue to make batteries, and we're going to continue to show the results of those and continue our discussions and sampling with our OEM partners. But mainly as well, we'll also be in Sri Lanka. We will be, as I said earlier, developing, getting our third mine permitted, our fourth mine permitted, our sixth, all the way up through to 10 or 20 or 40. We're just going to continue on, and we will also have cash flow. We will, as we're developing the markets, we're looking to see the hoisting graphite from both these mines, and then mine 3 and mine 4, let's say, we should be showing cash flow, which again is unusual. It'll be run-of-mine graphite, which has a higher selling price than flake, but we will then also be developing larger quantities for the OEMs. And who knows, we're in talks with many OEMs. The sense of urgency is coming with them. They're realizing that they need to secure supply. So, anything's possible as far as even indications of interest, that we can say publicly about an OEM wanting to buy our anode processed graphite. I'd just like to say, just to close, is that we have had an interesting time in Sri Lanka. As most of you know, we had some political issues to deal with. They changed governments. The president left. There's a new president in place now. So a lot of people were concerned about the political situation in Sri Lanka and how that would affect our operations. It really didn't. It slowed us down in a few areas, getting some permits signed, some signatures. The average person has a lot of trouble with fuel and whatnot. We have foreign currency, so we have no issues with supplying the mines. We're not a huge scale operation, but we have plenty of fuel, explosives, etc. So just want everybody to realize that Sri Lanka has sort of come through the worst of it, and we're looking to just continue and help the country recover financially, and also do our bit, albeit small, and look to revive an old industry in Sri Lanka that was there up until the 1940s. So we're excited about the future, and we're seeing what we can do to advance our mining operations as rapidly as possible.
White Gold's a recently formed junior gold exploration company based in Canada's Yukon Territory. The company was founded by the notorious prospector Sean Ryan, who's credited with the discovery of multi-million ounces of gold in the Klondike district of the Yukon. This is the area made famous 120 years ago by the infamous Klondike gold rush, where from that time until current days, we've seen over 20 million ounces of gold found literally in the creek beds. To this day, people are continuing to find copious amounts of gold, and it really, though, hasn't been explored with any modern technology until about 15 years ago when Sean Ryan went there. Sean Ryan comes from Canada's Timmins mining camp, and he went there with the thesis that if there's this much gold on surface, there must be more in the bedrock below. The question remained, though, why had no one done it for so long? And if Sean found that answer quite quickly, is that this area of the Yukon was never glaciated and therefore had very little outcrop. So the typical Canadian prospecting tools of sampling outcrop just didn't apply. Sean, a data scientist, self-proclaimed, and based on success, a very successful one, was able to use other methodologies to help source the mineralized systems, from which point he would conduct further extensive exploration. This technique almost immediately led to major successes, with two of his partner companies making major multi-million ounce discoveries and being taken out by majors. White Gold, with Sean Ryan, since that time has accumulated a true district scale portfolio, almost 1 million acres, which host some of these recently made discoveries, as well as a number of other very prospective properties, which we feel, with the knowledge that Sean's gained over the last several years, we basically cracked the code on how to make the discoveries. And we believe that we have in our control the majority of what can be a globally significant new gold camp, which we're literally just scratching the surface on, and what we think will continue to make new discoveries for literally decades to come. The white gold story, as I mentioned, is very unique based on the size of its land package in a very underexplored territory in what is a globally recognized Tier 1 mining jurisdiction. This recipe is very unique in the world today and has attracted several major mining companies to invest in the district. Newmont is one of the other majors who owns the Coffee deposit, multi-million ounce deposit discovered by Sean Ryan, which is our neighbor in the district. Rio Tinto is also invested in the district. The uniqueness of the opportunity of white gold, which owns one of the most exciting grassroots exploration portfolios, in addition to very significant gold deposits, has attracted two major mining companies to be our partner. This is very unique in the world of mining exploration, to have two successful companies to be able to understand the opportunity and join us from the very beginning. And we have been very fortunate to have Agnico Eagle and Kinross as our partner. They've been tremendous partners in providing capital to fund our ventures, as well as technical expertise. They, I believe, share our views that this is the early days of what can be a very significant mining camp. It's in a tremendous jurisdiction, which is showing to be increasingly more and more important worldwide. That reputation was developed by the district's support of mining, which is more and more evidenced every day with the number of mines that are being permitted in the territory. And we also see very significant financial contribution from the federal and territorial governments, specifically in support of mining and exploration. The Resource Gateway is a primary example where these governments are investing hundreds of millions of dollars to help provide access throughout the district to support the mining industry. It's a tremendous confluence of parameters that exist in this territory, and why we are so excited to be working there, and why other major mining companies have chosen this area to focus their efforts. White gold truly boasts some of the criteria which are most fundamental in providing the potential for success in a junior mining company. The first and foremost, it's in an area that's seen a tremendous amount of preliminary success. As I mentioned, over 20 million ounces of gold have been discovered on surface. The little amount of modern day exploration that has been done so far has been incredibly successful in terms that are almost unprecedented on a global scale. White gold has an enormous property that's truly a district scale opportunity. We liken the opportunity here to be like similar to owning, a massive amount of ground in Nevada, or in the Timmins camp in Ontario, or the Abitibi in Quebec, at the very early days of making discoveries in that camp. We truly believe that the techniques we've developed over the years, and Sean Ryan before that, has cracked the code in how to identify the mineralized systems. And from doing that work, we are literally just scratching the surface and being tremendously successful. The grassroots work we've done to date has provided several world-class discoveries. And part of that is our Golden Saddle and Arc deposits, which we have now delineated to be over 1.8 million ounces. We believe there's a tremendous amount of growth potential there. So we are a company that has defined resources in the ground, high grade, over 2 grams, open pit. We think this will provide for a tremendously robust project, and we're continuing to work on that. But I think what's even more exciting is the sheer opportunity from our grassroots portfolio. The more work we do, the more success we have, the more optimistic and confident we are about the prospectivities of the district. White Gold is in the process of a very extensive exploration program right now. We're excited to be one of the most active junior gold exploration companies in the market. We have designed what we believe will be an extremely impactful and program this year that has the opportunity to provide additional value within our portfolio. The majority of the program is focused in two regards. One is continuing to demonstrate the ability for our core deposits to continue to grow. As I mentioned, we have over 1.8 million ounces in total. Just to the west of that, we made a significant new discovery a couple of years ago on what is known as the Ryan's Trend. This is a 6-kilometer trend. We've made two major discoveries on that trend so far, one known as the Ryan Surprise, the other as the Yuli's Ridge. In the last few years, we've demonstrated the Ryan Surprise to host mineralization in a zone that's 400 meters by 400 meters by 400 meters deep, open in all directions. We think we'll be able to demonstrate additional ounces there to increase the size of our deposit. The Yuli's Ridge made another significant high-grade discovery last year, and we're continuing to drill this to add to those discoveries. The other area of our exploration program this year, which has seen a lot of effort, is on our Betty property. It's a very exciting property. It's contiguous to Newmont's multi-million ounce gold deposit, which Newmont is advancing towards production. It's also contiguous to Western Copper's behemoth copper gold porphyry project known as the Casino. This is truly elephant country. And last year in the maiden diamond drilling program, we were able to pull out an incredibly successful program with the discovery hole of 50 meters of 3.5 grams right from surface. To be able to have that type of success in the first program in this day and age from surface, I believe is almost unheard of. There's a number of exciting targets on this property. Have never seen diamond drilling, so we will be diamond drilling those other targets this year, as well as following up on the other discovery holes we made on the property. From our perspective, this is a dream of what this opportunity could come about. Here we are, in this tremendous part of the district with things happening and us being able to make these brand new grassroots discovery. We're very excited about the results from that part of our program, as well as the work we're doing near our flagship deposits. And really, we believe this is the tremendous opportunity from a risk reward perspective. We have true value in the ground. We have a tremendous amount of upside, exciting grassroots opportunity, and this is all within a massive district scale opportunity where we are continuing to do the preparatory work to find new potential grassroots targets, which we have a number of in the district, which we will continue to be drilling for many years to come. And we truly believe that the opportunity for more discoveries is very significant. We've never been more excited than we are today, and we are looking forward to the results from all this exciting exploration work that we've been doing in the last number of months.
Hello, I'm Mike DeRose, President and CEO of Lavras Gold Corporation. We're a Canadian exploration company focusing on our LDS project in southern Brazil. There are 6 compelling reasons to invest in Lavras Gold. The first reason is that we have compelling exploration potential. We are starting with a resource base of 1 million ounces in 2 deposits called Butia and Cerrito, and these are just 2 of 23 known gold occurrences on our concessions. We currently have a 16,000 meter drilling program ongoing, and we expect to generate some exciting results for the future. The second reason that we think you should invest in Lavras Gold is because our project is located in an area of very good infrastructure. We're 4.5 hours by tarmac road from a port city of Porto Alegre, which is a population of 1.5 million people, to our project at Lavras do Sol. It's got water, hydro, power, everything you want to see in a mining project. The third reason that we think Lavras is a compelling investment is because of our management team and board. We have a good mix of technical and financial and capital markets experience, and this should enable us to navigate through both all the technical challenges as well as the capital challenges in running a junior mining company. Also, management and insiders are aligned with all stakeholders, as we control something like 23% of the stock. So we're very focused on creating shareholder value for all stakeholders. The fourth reason that we like Lavras Gold, or we think you should like it, is because we have a very tight and disciplined capital structure. We have 41.1 million shares outstanding, minimal options granted, and no warrants. So this should allow good torque to any value creation that we create in the future for all stakeholders. The fifth reason to invest in Lavras Gold is because of our strong balance sheet. We ended the second quarter with $8 million in cash. We also have a 2% net smelter return royalty on the Mara Rosa prospect, which was something we acquired during the spin out of Amarillo Gold. This includes the highly prospective Pistino discovery, as well as 65,000 hectares of prospective exploration ground around the Mara Rosa project, which will be developed into a mine probably around the first half of 2024. The last and one of the probably the most compelling reason to own the stock right now is because the stock is very inexpensive. Our market cap, based on current share price, is about $9 million. If we back out the $8 million of cash and the value of the royalty, you're essentially getting our exploration portfolio for free. So if you have any questions, please reach out to the company. You can find more information at lavrasgold.com. Thank you.
Everybody, I'm Andrew Ditting from Sarama Resources. I'm the MD and CEO of the company, and I have been for some time now. I'm very excited to be able to bring you a progress update for Sarama. We've been very busy in the last 6 months. We've listed the company on the ASX in Australia, where we raised $8 million. We're now a dual-listed Canadian and Australian company looking to get the best out of both those markets. Sarama itself as a company, after the Australian listing and recapitalising, we've been very busy in the field in Burkina Faso. So we commenced a 50,000 metre drill program in May, and we managed to get 20,000 metres of drilling in before the rains caught up with us. So we're very pleased with that. And I'll run you through a little bit of that in a minute. But Sarama itself, for those of you who aren't familiar, we're a company that's been around quite a while. We've got a large undervalued resource with a lot of exploration upside. So we've got around 3 million ounces that really underpins the value of the company. And I think the important thing in that is about that resource, a third of that resource is oxides, and over 2/3 of it is over 2 grams a tonne. So they're all pit constrained resources. So they're pretty solid resource that will form the foundation of a mine at some point in the future. So as mentioned, we're listed on the ASX. The drill program we've just started, that's the first major drilling that we've done in the last 5 years. So we've had a restrictive JV for quite a while, but we're out of that now, and we're busy drilling in country. So the results that we've received are very good. We've put several news releases out in the last month or so as the results come in. We've been focused mostly around the Tankoro area, drilling in the mineralised corridor there. It's a very big corridor. We've got semi-contiguous mineralisation for over 16 kilometres. Importantly, though, the resource is concentrated in a couple of main areas. So the MM and MC prospects host about 80% of the gold in that area and around 2/3 of the resource for the whole project. So it's not spread out everywhere. We've also got another deposit at Bondi, which we acquired from Orezone, which is a high-grade free milling deposit, around 500,000 ounces that complements that package as well. So if you look at between those, most of the ounces are in 3 deposits. The thing that really excites us, though, and I think what our drill program is starting to show now, and anyone that's followed our recent news releases, hopefully they've been able to, I guess, track the thread of our thinking through that, is that we have a lot of mineralisation. We do have quite a lot of ounces now, but most of the gold is blind to surface. So we use soil sampling as a pathfinder. In some places that doesn't work that well due to the regolith. And what we're seeing now, we're targeting, I guess, different styles of mineralisation, different geometry that are outside the realms of what we've tracked in the past. So given the size of the system, we're pretty confident we're going to find a few more areas where we have a high density of ounces. And I think with the last kind of 3 releases we put out demonstrate that. So in the south of the project area, we've got a new discovery there called the Obi prospect. The important thing about this is it's a flat-lying zone of mineralisation. It's extended the oxide profile to about 80 metres in this area. It's higher tenor than what we've seen in that area, so some quite significant hits in the kind of 3-4 gram range at pretty solid intercepts. Fairly flat-lying, open for about 1.8 kilometres along trend. It hasn't got any drilling in it at all. And I think importantly, that zone intersects kind of subvertical mineralisation that we see in the area that's of lower tenor and different, looks like it's a different mineralising event. So we're pretty excited about that. We've drilled off about 950 metres of strike of that and probably 300 or 400 metres down dip. So pretty keen to chase that into fresh rock. We're getting quartz rock chips in the air core samples, so kind of indicating it's a different type of mineralisation to what we're used to. So I think importantly for us, it's a different mineralising event. It's a whole new geological analogue to target. And elsewhere in the belt where we see flat mineralisation like this, it typically tends to be higher tenor than what you're used to in the belt and larger deposits. So we're pretty keen to follow that up next season and look to grow that substantially. And obviously, being oxide will be all free milling and very early in the schedule down the track. So we've also been drilling in the MM prospect. We've got a number of very high grade, thick intercepts there, commencing pretty much at surface. It's within a currently modelled area, but outside the modelled zone. So it's all new high grade zones that would have been mined and gone to the waste dump that now will come into the resource at some point down the track. So very, very accretive to the obviously the profile of the project. And the release we put out today, it's a whole new area. It's about 600 metres outside where we have been drilling in the northeast structures. We've got 34 metres at 1.65 grams in oxide from very close to surface. So this represents, I guess, quite a significant hit outside the areas that we have been drilling. So we're very, very excited by that. So really the first 3 lots of results that we've got in, I guess, have proven up our thesis. We're of the view that, in this corridor, there's a lot of space to fit in a lot more ounces. And really our aim now is to get the oxides well through 1 million ounces so that we can establish a project for the first, 7 to 8 years minimum with a pretty good production profile just on pretty plain vanilla free digging oxide material. So that's all coming along pretty well. I think the other important thing in the last week has been the announcement by Mavericks that have bought Barrick's NSR on the project. Obviously, we're not in a position to disclose what they paid for it, but we had a ROFR on that NSR, but the amount that we paid for it was something that we wouldn't really look at. I think the good thing for us is having a group like that now, having an NSR on the project. They're entrepreneurial. It's in their interest to make sure the project moves ahead. But I think it's also smart money validating the project, and they're quite happy to pony up a fairly decent amount of money. So I think if you look at the developments for Sarama in the last 6 months, once we've got the shackles off, I guess removed the restrictions that we had due to the JV, cleared up a couple of permit title delays that we had, listed on the ASX, got some money in the bank. We've shown what we can do in a fairly short amount of time. So the drilling that we've done has shown that there's a lot of gaps left in the area. We're finding different styles of mineralisation, which is also very important. And I guess it supports our thesis that there's a lot more gold to be found in the area. If you look where we're operating now, we have Endeavour Mining immediately to the west, where they have their Bantu project, which is about 1.5 million ounces on it. So if you look at that in itself, if we didn't have a permit boundary there, the Tanquara deposit would have over 4 million ounces within a 5 or 6 kilometre radius. So down the track, I'm sure there's a conversation to be had on how we bring that area together under one banner. But the important thing for us, we've got enough ounces now that they would support an economic study. But really our main focus is bringing in more of this high value, shallow oxide material, which we think we can grow materially by the end of this 50,000 metre program. So that's kind of a quick snapshot of where Sarama's at the moment. We've been making a lot of progress now that we refinanced. We're very happy to be on the ASX. We're still focused on both obviously the North American and the Australian markets. We're funded to propel the company forward, and we're looking forward to the next drill season, which should start around November, pending when the rains in country end up and we can get around. So we look forward to, I guess, following in Orezone's steps, who are doing pretty well with their project at Bombore, and following in the steps of West African with their Kiaka project, and being the next cab off the ranks from a mine development point of view. And really our challenge now is just seeing how big we make the project before we make the transition to the next step. So I guess that's really it in summary. If anyone's going to be at the Precious Metals Summit in Beaver Creek next week, I'll be there. So feel free to catch me for a drink. My schedule's pretty full. In fact, I don't think I have any slots left. I don't have any for lunch for that matter, which probably won't hurt me. But so next week, if you're in Beaver Creek, look us up, and I'm sure there'll be a position that we can find some time for a chat. So thank you very much for your time.
Cypress Development is a Canadian-based advanced stage lithium company focused on developing its 100% owned Clayton Valley lithium project in Nevada. Our project is currently in a pilot plant stage and is progressing towards completion of a feasibility study and permitting, with the goal of becoming a domestic producer of lithium for the growing electric vehicle and battery storage market. What makes us different from the rest? Well, our project is one of the largest, most advanced lithium projects in the state of Nevada and has a mine life of over 40 years. But having a large resource is simply not enough. You need the ability to extract the lithium. And here our team uses a unique chlor-alkali process and holds a direct lithium extraction license to extract lithium from solution. In addition, we have water. Brine water in Nevada can be very limited, but unlike other companies, Cypress acquired the permit of water rights in Clayton Valley in 2021, and consequently, we have secured the majority of the project's future water requirements. So simply put, Cypress is developing the right commodity at the right stage in the right jurisdiction.